Hi, Jonathan York from Bow Financial Partners, looking at the investment markets. So far, a little bit of a mixed bag on the earnings coming out of the US. Certainly, Coca-Cola and UPS were pretty strong and gave some pretty reasonable guidance as well. But then on the flip side, Microsoft didn't, sort of a little bit better than anticipated, but their guidance was a little bit on the soft side, whereas Alphabet sort of missed on the top and bottom line, and again, their guidance was a little bit softer. We look at a company like Alphabet now; it's down nearly 30% for the year. Is it a sort of approaching reasonable buying levels? There's a lot of the bad news already priced in. Because certainly, if you look at the Dow in October, it's up over nearly 3,000 points. That's a pretty big up move. September really was pretty brutal, and supposedly the sort of rationale behind the rally is obviously earnings on some of the companies is a little bit better than anticipated, and given the sell-off, the price earnings ratios were looking reasonably attractive. But also as well, potentially now they're looking that the Fed might be looking at sort of softening its sort of hardened stance against inflation in terms of the size of the interest rate increases. So the next meeting is pretty well priced in now, another 75 basis point increase. But after that, is the Fed then looking to pause or looking to sort of reduce the size of the increases? Because still looking at a terminal rate for the Fed funds rate of around sort of 4.8. And what is quite interesting as well, the 10 years backed off now from that sort of 4.25, currently trading around 4.1. But obviously still plenty of companies to report their earnings. Also as well, you've still got midterms coming up as well, and they're going to be very interesting to see what happens there. Elsewhere, obviously, you've still got the Ukraine-Russian war taking place. Russia's now come out and accused Ukraine of potentially going to use a dirty bomb. Now, I think that's Putin just trying to sort of lay the groundwork because, potentially Russia is already sort of planning that. Because certainly in the regions that they've annexed, especially around Kherson, they're having to retreat pretty rapidly. Which again is further humiliation for Putin. And in China, obviously, the big news is Xi Jinping has got a third term. Again, unprecedented. Potentially could be in power for another 10 years. Now, oil still trading around sort of 85 bucks a barrel. Now, in the UK, Rishi Sunak has now been sworn in as the new Prime Minister. Remember he lost out to Liz Truss just 6 weeks ago. Potentially they probably should have chosen him in the first place because it would have avoided a lot of this mess. Because that's the third Prime Minister they've had now in less than 2 months. And certainly the UK facing some pretty major sort of uphill battles. And it's just going to be interesting to see how it does sort of play through because certainly it looks like it's going to be a long, cold winter in the UK. Likewise for Europe as well. It looks like it's going to be a long, cold winter. Hopefully, it won't be too harsh in terms of weather conditions because if it is, potentially there could be some really pretty major energy crisis taking place in that part of the world. Now, close at home in Australia, they're starting to see a bit of a clean up now in the sort of flood-hit areas of New South Wales and Victoria. Although potentially there's still further rain to come over the next sort of 4 to 5 weeks. But again, certainly the Australian economy still looks in reasonable shape, and it's going to be interesting going into the sort of Christmas period whether the consumer does get out there and spend. Because certainly consumer confidence did pick up quite a bit after the recent Reserve Bank meeting, where they only put up rates by a quarter point. Now here in New Zealand, just over the last 12 months, rates have gone from 0.25 to 3.5%. Now that's a huge increase, obviously trying to fight the inflation, but it's really just going to be interesting to see how it does sort of play through, because certainly they're still anticipating a further rate rise at the next OCR meeting. And indeed, some talk has even been, will it be 75 basis points or another 50? If it was 75, that would take it to 4.25%. Obviously, the housing market is slowing down dramatically on the back of that, and prices are falling, as you would expect, as mortgage rates do increase. Because now those people coming off their fixed mortgages are now sort of having to refix at a sort of a 5 or a 6 handle. But obviously the positive side is that, with the rate increases, you're starting to see on the fixed interest side now, bonds are coming through now with sort of high 5s or maybe early 6s as an interest rate, which does make it reasonably attractive. Because if you look just 12 months ago, they were sort of coming through at sort of, high 2s or low 3s. Obviously, that rise in equity markets is going to have quite a pronounced impact on KiwiSaver balances as those start to recover and increase with the rising equity levels. Now, obviously, tourists are starting to come back into New Zealand now, but now the worry is that the tourism industry and hospitality just doesn't have enough staff to be able to look after them. Really quite interesting, the sort of tourist hotspots, especially in the south and sort of North Island. A lot of restaurants and sort of hospitality, cafes, etc., are having to reduce their hours just because they haven't got enough staff to be able to open. Now, obviously, that could have a major impact on their GDP. Also, as well, seems to be slipping under the radar, but it's interesting now that the government's only reporting COVID cases on a weekly basis. Those numbers are starting to rise quite dramatically. So if you are looking for income options, you say go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.